Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I author in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key on your video player.
Good day, all. Ira Epstein of Linn and Associates with your metals market update, and this is for Monday, and we're now at January 28th, 2019, just after 3:30 p.m. Central Standard Time. A warning for all traders. The Chicago, in fact, the whole Midwest area is getting hit by extreme cold. Now, when I say extreme, we're used to cold in Chicago, but not this. We're talking of going 50 to 60 below zero. With the wind chill, without the wind chill, maybe 24 to 28 below zero in the city. That will stop traffic, that will stop people from coming to work. Be ready for that. Most people can work off the internet, but understand, if you're doing business in the Midwest, especially the Chicago area, starting on Wednesday into Thursday, it's going to be just as bad Thursday. Keep that in the back of your mind. A lot of people will not be making it to the offices. They're already put out warnings throughout the city. Stay home if you can. So when you look at the market today, the stock market down, we saw that there was finally a White House press conference. We saw a whole array of people coming up there. We had Sarah Saunders, we had John Bolton, we had Steve Mnuchin, Larry Kudlow. So there was something for everybody in these markets. Now, as you know, the government has just reopened. I don't know which reports will and won't make it out this week, as the government's doing its best to get things back on track, and they're sending out, they're going to try to get this out, try to get that out. We'll wait and see. What we do know is you have the FOMC meeting, and we're supposed to have employment data this week. The rest of it, I can't answer. So when you look at the gold, it just doesn't backing off. The market is looking at the dollar pretty stable, the euro fairly stable, but it's looking at Chinese trade, the FOMC statement, and it's figuring nothing's going to come out to hurt it out of those statements. Now, when you look at how the market's done, this is going to be a new high close in recent memory, since August at least, back into the 1302 area. We had a downtrend at work. This was last week, and remember, on Fridays I do the weekend edition. So this was Thursday's action. On Friday, it had a big pop to the upside, and now because you're 2 days over that line, this line is no longer valid. I will remove it, but that's my rule of thumb. 2 times over it, and the line is bumped out. When we look at the pattern, the market used this sideways pattern, and looking back at it as something of a base to spring higher, it did not do it with a clean trend. Clean means we have a pattern of a lower low and a higher high. That is not a trend. The market got over on Friday the 18-day average and managed to follow through. The red line's the 18-day average. When a market's over it, I say it has a bullish bias. Under it, a bearish bias. So the market has a bullish bias. It hit on Friday, and again today, it's played at the upper Bollinger Band. Looks like it's going to close over it today. The importance of that is that only 5% of the time does the market stay over a Bollinger Band or under it. Therefore, the market's a little ahead of itself. That's the way to look at it. That doesn't mean it's not going higher. It looks as though it's trying to break out, if anything. At the same time, it's overbought. What does overbought mean? When I look at the slow stochastic reading, any number over 70, there's 2 numbers that make it up. They're called a K and a D, the red and the blue, if you will. Either of those numbers being over 70 is overbought. Either being under 30 is oversold. I view the market as overbought, an attempt to break it out of this to the upside, support back at the 18-day average of closes. The pattern in GLD, the popular ETF, is the same. Lower low, higher high, did the identical thing, and it's overbought. The better looking of the charts are the miners. They have the pattern of higher lows, higher highs. Online may be a better looking pattern to get up to that upper Bollinger Band and support back at 2097. The gold-silver ratio got up as high as around 83 83 3/4. That's 83 3/4 ounces of silver to buy 1 ounce of gold. It has now slipped back to about 82.70. The silver market's in an uptrend with higher lows, higher highs. The momentum is pointing up. It is not yet in overbought territory. Support is back at the 18-day average at 1561 with IC resistance 1592. In the copper market, I was expecting on Friday that, with the Chinese delegation coming in this week, the market was going to be up. I didn't really expect it to be down as hard as it was today. Now that the Chinese first leg of the delegation's here and the rest start arriving tonight and tomorrow, support is back at the 18-day average. The market is working off an overbought condition that it got in. In the platinum market, pulling back to support at the 18-day average of closes. We have a higher high, lower low pattern. It's more of a trading affair than anything else. And the palladium, after it got to this peak, fell back to that line in the sand. Last Friday held it, and the market is still holding it. Back and forth action here, not a trend any longer. The market just going back and forth as the dollar is trying to stay under the 18-day average. First thing it's having is a bit of support being seen at the 100-day average. If that gives ground, maybe you're going down to the lower Bollinger Band. Resistance, 95.59. Remember, one of the things that we try to offer all of you is our handheld devices. They look like this. They'll give you quotes, market news. You're going to get my streams of the videos. They come right in there. If you're subscribing to my research, it'll put out a push notification on your smartphone, tell you that it's there instead of a text. Doesn't cost anything that way, and away we go. At least I don't think it does. You can look here to get it, and it's free to you. 866-973-2077, or go to our website and sign up for our charting platform. You're going to need our user ID and password for yourself. So just don't go and download this from Google Play or Apple Store. Wait first to get your user ID and password from us, then it'll all work for you. I'm Ira Epstein. You have a good day. I'll talk to you tomorrow.